Hello and welcome to Ledgercast. My name is Brian Krogsgaard. I'm here with Josh Olsowich. Hey, Josh.
Mr. Brian, how are you?
I am doing well. It is a pleasure to be here with you, and it's a pleasure to have Matcha as our partner again this week and every week. Because
that was a quick plug.
Hey, that's right. That's what we're here for. With Matcha, you get aggregated trading, and you go to ledgerstatus.com/matcha, MATCHA. I need y'all to go to that link, and I need you to make a trade just like you see here on the screen, because it's fantastic user experience, and they choose all the best liquidity pools for you. They make it really, really simple. It works really, really well. That's all you need to know. It's a great experience. They aggregate the liquidity. You don't have to choose which swap to pull it from. The fees are fantastic. They came out with this report about how much cheaper it is to use Matcha versus other sources or going direct to Uniswap or anywhere else.
72% of the time, it takes a better trade than other APIs.
Yep, it's very good. And we want you to try it because we believe that they have the best DEX trading product in the market, and we're glad to have them as a partner. All right, Josh, we got a little spicy action here on Bitcoin.
Started what was it? Was it yesterday? My days are so between like not leaving my abode and sleeping all over the place as far as my sleep schedule. I just forget which day is which. But on one of these days this week, we had the Square $50 million BTC purchase announcement, as well as Legacy popped up. I think that was yesterday, right?
Yeah, that was yesterday. That's what kicked us off. Like, we were ready for a breakup, and then,
Well, we were ready for something.
We were ready for
we were ready to react to anything,
Yeah.
Because we'd been sideways for so long, but go ahead.
So one of the most bullish, crypto companies out there saying they're putting 1% of their treasury into Bitcoin itself in a direct investment. And as Jack noted on Twitter, one of the important things is to share with others how they actually accomplished that, because, you have to deal with as they note in their white paper that we'll link, there's the execution component, how to buy it. There's the custody component. They have insurance on it. And then there's how to account for it. And a public company has to figure all that stuff out because all of those things are really important. And
right, to you and I and anybody else, it's like you just go to wherever and buy it, right?
But yeah, but they can't do that.
Yeah.
So that's what took us, if you look at like the lower time frames from this consolidation that was happening, and it gave us the leg up.
I don't know. So I tend to disagree with that. I don't think it was necessarily the Square stuff. Just the Legacy market opened bullish that day, and it just so happened to correlate with the news. But
yeah, but it happened at that exact time. Like it didn't hurt it.
No. It all meshed together for sure. I just don't think you can say this was the exact reason. Like if Legacy opens down 2% on the day, I don't think we get a reaction like we did.
Yeah, I think that's fair. Like, I mean, it's probably cliche, like the old Jesse Livermore quote or whatever. Like, the first thing is the broad market, and then you go down to the specific market. So
did he say that like that? I don't remember that quote.
No, it wasn't. It wasn't exactly that.
Didn't he die a penniless debtor? Like there's this obsession with Jesse Livermore that doesn't make sense. But anyway, go ahead.
I'm gonna have to find it now. 25 Jesse Livermore trading rules.
Was he the one who wrote Reminiscence of a Stock Operator, or is that somebody else?
I don't know, man. I can't remember.
Yeah, I don't know either. But
famous trader.
It's just funny.
He has lots of tips though that we can read through.
Yeah, but again, he died of a penniless debtor, so I'm pretty sure.
It's just a typical trader, I guess.
Typical LARPer.
Yeah.
But he did have some good lessons for sure.
He did. These are all honestly pretty good tips. So, take that on notice, crypto folks. You can be one of the most famous market wizards and still die poor.
He's committed suicide. It's real dark here.
That's dark.
His son and grandson also committed suicide, so probably a little bit of a genetic psychological thing going on there. Anyway,
This is kind of along the lines of what I was looking for. He talked about the high correlation between all stocks. So he basically said in bear markets, all stocks go down, and in a bull market, all stocks go up. But there, somewhere I saw a quote of his where it was more specific than that. It was his or someone else famous, and it was basically like, if the whole market is pointing upwards, then you need to be looking for long trades on specific stocks, and you're fighting against the wind if you're trying to go the other direction.
are you trying to tell me the trend is my friend, Brian?
The trend is your friend, but also we're going too far on this, but like the broad the broad market, like if all alts are positive and going upwards, why would you look for an alt to short? And vice versa, if alts are crap, why are you going to look for the alt to long?
Yeah, like last week when DeFi looked like it was going to go to zero, it's tough to stomach going long,
Yet, go long. I tried. Why don't we talk about that? The reversal in DeFi stuff. The darlings of DeFi between Uni, Wi-Fi, and others, they really broke down from their, their attempts at. They never really had a great chance of breaking up, but it was a question of when are they going to bottom, and they all went pretty parabolic there towards the end. Personally, I got in and out a couple of times looking for, when am I going to have this opportunity? And the biggest haircut I took was about 10% on Uni. And then if I would have just held it, which still wasn't the right play, it got beyond my risk parameters because I would have been down 15% at the lows. But I probably should have scaled in like a little bit at a time once it was down there below $3. And I'm using Uni as my example. Because as a total drawdown, let's see, on Uni, it was 70%. And that was one of the stronger ones, which was also why I was looking to get back in that one. Wi-Fi also had a bottomy situation. Their top to bottom on Wi-Fi was 72%. Yeah, so the strongest coins in the market were down like 70%. A lot of DeFi coins, though, were down even more. And pretty much all of them end in some kind of parabolic capitulation. So I tried to snag them. I still got in, to various coins when they started to respond, but I took that 10% one was my biggest paper cut because that was with decent size. But I took several like kind of scratch type paper cuts on the way down too, because they just kept melting, man. Like DeFi really cooled down there.
What did you expect?
I expected downward.
Well, let's get into the minds of Brian here. What was your mindset going into those trades? Like, I just hope it bounces, or was there like some conviction that you thought?
No, it was like a variety of seeking some mean reversion and the market more broadly looking strong enough. Bitcoin had gone through this consolidation, so at Ethereum, my bullishness on those was reasonable. And most of these coins, some of them had already gone down quite a lot, like more than what I just said. Like if I look at some examples, there's like some of the mid caps, like Cream, for example, had already gone down 82% top to bottom and burned like 2/3 of their supply. So actually that's one of the ones where I just kind of got in with a small amount and kept it, bought it at 32 and now it's at 42. So it worked out on that one. But I was looking for stuff where where there was both centralized exchange exposure and decentralized exchange exposure, where I felt like they had already bottomed or gotten close to it. And I was trying to catch that move on the way back up. And to be fair, like on the drawdowns, I know a lot of people lost a ton. My overall drawdown from DeFi over the past month was not big. because I got out on the way up. So I was trying to get back in, like when I felt things were starting to bottom. The hard part was the last legs on some of these were pretty big. Curve is another example. I mean, I started trying to get in on Curve once it got below $1, like 90 cents. Well, that sucker bottomed at 45 cents. So that's why I didn't hold it. I got out when it went beyond my parameters. But the trade, once the bottom happens, is, not bad. Like Curve's up 30% in a day. Wi-Fi went up like 40% in 24 hours. So that was the type of thing that I was trying to catch. I didn't get as much of it as I wanted, though. I got back in ZRX as an example. But, like ZRX from where I bought it to where it went was maybe 10 or 12%. So,
well, it surprised me. So I did an article on ZRX and an article on BAT this week.
mm-hmm.
And what surprised me was they're both down like 50% in 40 days. Just like absolute Eiffel Tower devastation.
Yeah, I mean, they went down a lot. And
so I see your argument there as far as like, all right, it's got to bounce soon, right? Some of this stuff.
Some were mean reversion, like some of the DeFi projects. Some were like back to levels that were breakout levels, like on ZRX. So ZRX, I was playing at the 200-day moving average, horizontal range that I liked. Like a lot of stuff lined up for me to like that level on ZRX. The DeFi ones are tougher because some of those that, if they're like Curve, for example, if they're in like some kind of price exploration, you're really just trying to get that scalp on the mean reversion as people close shorts and stuff. So,
well, if you, for some reason, ZRX and BAT get lumped into the DeFi stuff. ZRX I can sort of understand, but
I don't
BAT
really understand why BAT gets lumped into that. But
yeah, I don't know either. But based on the chart, like it's clear that it all correlated with DeFi in that it died off equally as much. But really, I think it comes down to Link. If Link looks good, then the rest of the market, DeFi wise, should respond.
Yeah. So let's skip to now. People may or may not have gotten some of the long exposure on the rebound, but now we've had a day or two or three on most of these where they start to work their way back up. Do you think these are big bearish retests and all this stuff needs to go down more, or do you think that there's more leg room for upward momentum on DeFi stuff, altcoin stuff?
Yeah, so this week I did a video on DeFi as well, and I basically said you're either looking for knife catching, which is basically what you did, or you're buying on mean reversion plays. There were also a few coins that had falling wedges into the 200, which is always a decent play as well, as far as a bullish reversal type thing.
Yeah.
But just looking at this link chart, I haven't looked at it in a while, but it looks like it's trying to Adam and Eve here on the low time frames.
Yeah, I actually think it looks okay.
It's actually less bullish than BTC is right now because BTC's got a Kuma breakout to the upside. But if we measure out this Adam and Eve, we get a target of 1314 on Link USD, and then it casts a mega decision from there. So I don't think it's like bull trend bullish. It's more just like it's sold off enough, like you said, where it's going to have some reaction at this point.
Yeah, that's kind of where I am too. Like when I look at Ethereum, it's back above the 20-day moving average. Like that's a breakout above the 20-day moving average from my point of view. Hit a diagonal breakout, and then it runs into a lot of traffic, like between 380 and 400. So I don't know what they do there. Meanwhile, Bitcoin looks ready for more than that if it can get above its current level. Like it's kind of already at the place where it needs to break out from. Like if Bitcoin goes above where it is now, it's got a lot higher to go in my mind. Whereas Ethereum and some of this other large cap altcoins, they have a little room to run now, and then they run into that traffic. Like Bitcoin's at that traffic, so kind of that dynamic of like what moves, what waits, how does it all play together? Can you time it right? That's what I'm trying to figure out. And my current,
it would make sense if BTC moved more than everything else now, because it's just a part of that is rotation. Part of it is just like lagging. BTC has clearly lagged DeFi over the past 3 months, right?
Yeah.
So to expect more upside over on BTC isn't out of the question, I don't think.
Yeah. So what's my strategy right now is trying to essentially have some leverage to DeFi stuff and altcoins while they have these upward moves. And then I'm essentially hedging that because I'm bullish overall. But the way I'm hedging that is if Bitcoin goes, then I need some leverage exposure to Bitcoin so that if the altcoins like start to die off relative to Bitcoin, I'm still kind of netting out okay there. Does that make sense?
Yeah. You're basically hedged.
I'm hedged on the long, like I'm hedged for the long side. Now, if we go down, alts will suck and Bitcoin will suck and I'll suck. Uh, but I have pretty strong conviction that we're on the way up, not on the way down.
Yeah, I mean, bullish Kumo breakout after 30 days, like that's about as much conviction as I need to open a trade at this point. 37 days we've been in the cloud. The next thing you're waiting for is the bullish TK cross, and then it's set as far as directionality's bias is concerned on the cloud.
Yeah, if you're looking at the cloud though, this is a question I have for you. What weight do you give the Kijun when it's in this weird spot? Like the Kijun's above the cloud, but the Tinkin's below the Kijun, and the Kijun looks like a ceiling on price. Is it like a small resistance, a big resistance? What's the bigger deal here? The cloud, the Kijun, what?
Yeah, I had a lot of people ask me about this. So in general, unless all the metrics are aligned, you can't like size up a position. You see this Kumo breakout here and you're thinking, all right, this guy says I should be long, but the rest of the metrics, this TK cross, that's really the ultimate determining factor here as far as sizing up a long position. So that's why I was saying 11111 is a resistance level, whatever it is on whatever exchange.
Yeah.
The Kijun. So there's still going to be resistance there for sure. So you're better off. The most prudent entry would be waiting for the bullish TK cross, because at that point your moving averages are basically aligned so that you're ready to go. You could also look at this on Alligator, and it probably shows. Do I have fractals? I do. So Alligator Fractal has you getting in an entry on October 8th, I think, or today, depending on how you read the EMA flips. But the low time frame MAs look really good for up here on BTC.
Yeah, I all that makes sense to me too. From a practical perspective, would you say like you're already comfortable in spot and then you're looking for margin longs if you get above, like if you get the full, like the complete bullish picture from a cloud standpoint?
Yeah, that sounds good. I mean, you can either open like a DCA position, or you're opening a little by little every day, and then you just size it. You just like double the size on the TK cross, or you just buy spot blindly and then margin long the TK cross. B-Bands is also showing breakout potential with price above the upper B-band here. Kind of similar to July.
Yeah.
Late July.
I definitely think this is the key level. I did a tweet where I talked about wanting to get long at 10.7 and I was like, I should probably set my order for 10.6 because that would be kind of where my low time frame stop would have been. And it went to about 10.550. So that should have been when it recovered that, been my real hint to get long. But I said, more importantly, the smart place to close of a low time frame trade like that would be more like 11111, because it really lines up between that Kijun you said, the diagonal of whatever this flag or whatever you want to call it is, and this horizontal level that we wicked into 3 or 4 times back before we finally broke down and then provided resistance, and now it's resistance again. So this level, October 10th and 11111, has a lot going on. And I think when we break above it, I think that gives us a move above 12K, probably new highs and a significant Bitcoin price move that hurts altcoins on relative pairs.
Yeah, and if we're talking about TK stuff that I'm most concerned with, it's this weekly TK disequilibrium for BTC. It's still quite large. The keychain hasn't caught up yet. So the slower this goes, as I always say, the slow trends win out. So if this takes 2 weeks to break above 11.111, that's fine with me. You know, whatever. It's just going to be better, honestly, if this just waits.
Now, if you look at the Ethereum daily cloud, same kind of setup. It's not really showing the levels that Bitcoin is at until it gets to 390, 395, which also aligns with that its version of kind of this horizontal resistance and that traffic that we talked about.
Yeah, it's still kind of stuck in no man's land in the cloud.
Yeah, so it was faster, but now it's lagging a little bit. But so one of the Ethereum related things that gets me excited to make me think maybe it can continue to outperform Bitcoin over certain time frames, probably speeds up as Bitcoin slows down, that kind of thing. The weekly cloud situation, I mean, it looks like about as bullish of a retest as you could get. It really only dipped down into the Tinkin, never got to the Kijun, and it's still kind of in the middle of that big fat cloud, but the big fat cloud turned green. Like, this just looks like it wants to slam the top side of the cloud here at some point, which are targets that we've talked about a lot. One being, depending on how long it takes, maybe around 460, where that one ledge is, and another around 790, something like that, which that would be quite a move.
Yeah, the ETH weekly cloud also has a TK disequilibrium, not as big as BTC. It still has that 750 target. But the main thing I'm seeing on the weekly is the bullish Kumo twist for the first time since 2018. And that's massive. That has implications for 2021. I was saying in a tweet that like Q2 2021 for Ethereum should just be absolute insanity.
Right. Even if you go to like, I mean, that cloud is already, it's out to like May 2021. So let's say we did all kinds of stuff between now and mid next year. We go to 750 and we retrace 50%. Well, it's going to give you a target of where to buy. Like $300 Ethereum is going to sound very affordable if unless this trend fails and like recrosses bearish weekly cloud, all that stuff. So like if you're looking at it from that type of trend shift, like Ethereum is in a strong position here.
Yeah, it's and with the fundamental stuff eventually coming, the proof of stake nonsense. I mean, we saw what happened with ADA in the run up there, as far as people FOMOing into ADA pre proof of stake.
Yeah.
Rollover, whatever you want to call it.
And if we stick with our weekly cloud pictures and stuff, I mean, Bitcoin's cloud is just much more difficult of a situation to figure out, don't you think? Like, it's skinnier clouds. It had the fake breakout to the top side. I don't know what to make of it as much.
Yeah, again, the slower the better. So if this takes until Q2 2021 to make a decision, I'm all for it. If this drops down to 8.5 and then we go to new all-time highs, that's fine with me too. But if we look at what happened in 2016, you never actually got the Kijun bounce ever, at least on candle line chart. On candle wicks you did with the Bitfinex hack in August 2016. But you never actually touched the Kijun the whole time.
Which is obviously a sign of an extraordinarily bullish market.
Right. And we had not as great of a TK disequilibrium in 2016, but pretty big. And it wasn't even bothered by that.
Yeah. Similarly on Bitcoin, if you look at the weekly, just from a levels and like moving average perspective, I mean, it looks like a perfect response to the 20-week. We've talked about the 20-week a ton here in terms of it generally being pretty respectful of the 20-week in trends. And by pretty respectful, I mean quite. As well as confirming the 10-2 weekly level. I mean, Bitcoin, everything just looks strong. Everything looks strong.
Yeah. It looks more and more bullish every day. We'll say it like that. As far as continuation is concerned, especially with the bullish Kumo breakout, that's really the most conviction that I'm seeing. Everything else looks like it wants to go up, but to see it actually break through the cloud after 40 days is huge.
Yeah. Hey, you know what doesn't look bullish? Not anymore. It's the old dollar, the Dixie, the DXY. We talked about this head and shoulders, depending on diagonal, horizontal, whatever, it broke out. We had hinted how, our expectation might be that it kind of underperforms the breakout, which it definitely did. And it could have really just turned that into a retest before proper continuation up. The fundamentals just seem too against the Dixie to me. Like, Trump is screaming for more stimulus now. Like, he's just flinging stuff around trying to get reelected. But Republicans and Democrats are all talking in the trillions of dollars in terms of what they're willing to do. And we've been living and dying based on the daily machinations of this chart. And today was, in my mind, a complete failure of the reversal and is on its way to failing it even further, like below 92.80 or so. Full failure of the right shoulder, which, I mean, that could send us to like 90 on the Dixie or lower. Extraordinarily bearish looking to me.
Yeah, I got to pull up that correlation chart again.
Yeah, you pull that up. To make a new low would be like 88.90. That was a weekly close low, 89, back in 2018. And I think that is totally possible from this. In fact, there's a little bit of a fractal here to 2017 when it failed a similar looking attempt at reversal. And it went from 93 to that 88 low. And we're doing this one from about the same level. And I think a failure of this head and shoulders could easily take us back to like 88 on the Dixie, which would be very, very bullish Bitcoin in my mind, and very bullish stocks and everything else. You've got correlations to look at? Or thoughts on the dollar?
Yeah. So yesterday I did a video on legacy stuff, and I was saying it's got this bullish edge to edge that is concerning for BTC. And it clearly has failed that opportunity at this point, which is hugely bullish for BTC. But then if we look at these correlations, this is the 30-week rolling correlation with the Dixie in the orange here.
That's a long time. That's 7 months, 8 months?
7 months? I don't know. I don't know times, Brian. I don't know the calendar. I don't know months of the year. If you asked me to cite the months in order, it'd be tough.
Months.
It'd be tough for me to do. But anyway, it's like 91% negative correlation with the Dixie. So if you can't not pay attention to the Dixie,
And
so
for what it's worth, when we talked about the bullish reversal when Dixie was bottoming, people were giving us crap about watching it day in, day out, but it gave headwinds to the whole market. And it has been the pair to watch for determining what Bitcoin's going to do, what Legacy's going to do. Like it's the Dixie is driving right now. And what's driving the Dixie are Trump tweets and legislative battles and crap like that. So welcome to this glorious world of having to watch the news.
Yeah. And if it's negative 90% correlation with Dixie,
you have to watch it.
You got to watch it. Same thing with gold. The gold is almost the highest correlation on a 30-week rolling that it's ever had. 92% right now.
Yeah.
And even gold had a move off of the Dixie today reaction. I was saying in the video yesterday that if metals mean revert, it should be bearish for BTC as well because of the correlations. But it doesn't look like gold wanted to mean revert today because it bounced a lot for gold. What is it up? 10%? 4%, my bad.
I don't know. A lot.
4%. It's up 4% a couple days. So I don't know. Looks pretty good.
Yeah.
If the stimulus does pass, like you were saying before we started recording, like Dixie could just go way low,
Yeah.
Where do I have that? What's like a multi-year low for the Dixie?
That's what that 88 was.
Okay, yeah, 88.
Yeah. So when I was trying to figure some of that out, I made the decision to finally move some stuff back from cash and in long-term accounts. on September 24th, which I was a little nervous about. It was the 2020 Open, but it wasn't like a moving average I liked. It was kind of a horizontal level that was okay. So far, I'm pretty glad I did that, despite the technicals being like pretty low in terms of the amount of retrace it got. When you consider what we did between, March and September, I was like, I don't know. I mean, this is not a deep retrace, but uh, this amount of money printing and everything else, like I feel like gold, stocks, real estate, Bitcoin, these are all good things to be in because we seem to not care about protecting the power of the currency. Like, and so far that's working out.
The logic makes sense, I guess, right? If like we
Bullish
just
everything.
it's like I don't know, if to somebody who's not mega libertarian, libertarian minded person like myself, to see all this stuff actually playing out after years and years of people talking about it and like Ron Paul screaming about it. I don't know, it's just kind of surreal to see like the money printing.
Yeah, and there's no fiscal conservatives, basically.
No. I saw something like our debt is greater than our GDP now as of yesterday.
Yeah, it doesn't surprise me. Gold miners, kind of the same story. I got back in this one a little too early, but I'm back in profit already. Huge response off the 20 week, back up. It failed to flag and recovered it, which gold and gold miners both did, which to me is just hyper bullish, like hyper bullish. So I look at something like, I'm looking at junior gold miners right now. Next real resistance is like 72 and it's under 60 right now. There's a nice trade in there. This is a big shift for me. Of course, now it'll all fall apart because I've not been overly bullish. But I can't deny that this appears to be what the market wants. Not everyone agrees, Josh. Did you see this Hedge Eye stuff and Keith McCullough? Do you know anything about him?
I know the name. I didn't see anything recently though.
He sold all his Bitcoin.
Oh yeah, that guy. Yeah.
And he made money on it, so I'm not hating on him. Like he had his trade, but he kind of made this, and it was like an announcement the way he did it, and he says it's like, what do you call it? Like quad 4 is his claim. So he's predicting that we're going into a more deflationary market, that the market in general is going to be decelerating. So I was kind of surprised by that. But he's basing it more off GDP growth and inflation as well, which I just don't see it. I don't see it. We're going to spend money like crazy. We're debating whether to spend 1.6 trillion or 1.8 trillion right now, aren't we?
Yeah, it's in the trillions. So, and the VIX is down to 25 today, by the way.
Yeah. So, I mean, he's kind of a perma bear. Not totally, like, but I say he's bearish a larger percentage of the time than the market is bearish. So maybe that's part of it.
If there's one thing I've noticed, it's that the legacy people on crypto specifically have always been bearish, but when they're bearish and right, we're super bearish. But when we're bullish and right, we're uber bullish, right? Like we're so keyed into like the moves. Really anybody in crypto who's been around, because I think anybody's bias who's here is naturally up, right? Or else he wouldn't be here.
Yeah. Yeah, and that was kind of his critique of crypto people as well, that we're emotional about it. But I think it's not so emotional. It's a fundamental differentiator. But I just look at everything and it just all points to the same thing for me. Like gold, good gracious. I mean, it was a retest below the prior all-time highs from 2011, but right off the 20-week, not an inch below the 20-week. Like, bam. I mean, perfect mean reversion from a moving average standpoint and up. It just, all this stuff looks really freaking strong to me. Yeah, cash is trash. Ray Dalio was right. His timing wasn't good, but he was still right.
was talking to somebody yesterday about white coffee and accumulation. I don't know his actual name. I met him in real life plenty of times. Jack Bauer, Crypto Jack on Twitter. But he was sharing with me these white coffee and accumulation charts. Even on the alt market cap, total 2 is the ticker on BTC or on TradingView. It's the market cap of everything minus BTC. That is showing excellent white coffee and accumulation vibes, white coffee and markup at this point. ETH as well looks great for white coffee and markup, which makes sense with the 750 targets. We were saying before we started, XMR looks incredibly strong here. Also showing white coffee and markup as far as where it's at in the cycle.
Jack's
So
on
all
the
this
stream right now too, by the way.
Jack's in the chat. Yeah. All this stuff looks really good to me. So to see other people coming up with stuff that I agree with, that helps my bias, obviously. But
yeah, the long-term chart, like the weekly and the monthly for that matter too. There's also that, you can call it a meme diagonal, I guess, but like, I don't know, if I was looking at some other asset, I would be paying attention to this lifetime diagonal. We're taking our time on the little pennant, the weekly pennant before markup after breakout, but it still looks good. It looks great.
yeah, I feel like the legacy people especially pay attention to like the simplest shit, the simplest stuff like that.
But I would be too. Like, I think if I was looking at an asset class I don't know as much about, but I'm willing to have exposure to, that's probably the chart I'd be looking at. Like, if you're just going to buy some Bitcoin and leave it there for like a year, then look at the chart that is a pattern formation based on the last 3 years,
Yeah. I mean, they were right. The last time I saw legacy people talking about crypto was really like 2018.
The breakdown off 2018.
The breakdown, yeah, where they were super bearish and I was more bullish than bearish. But
yeah.
But yeah, this diag stuff, it's not bearish, right? Like, and you could also draw just like this horizontal line at
11,
12,
12, yeah.
12, 11, 5, whatever you want to do. Like if we close above 12 on a weekly, watch out.
We're flying.
Because then we're talking yearly pivots territory to 18.
That's what that yearly pivot is, 18.
Yeah, 18.6.
Hey, we talked about it at the beginning of the year. I think I said 16, and I think you surely pointed at these pivots for 18. So we've got Q4 to pull through for us to get there.
There you go. Talking my seasonality stuff.
Yeah.
October, November. Thanksgiving. If anyone remembers 2017 Thanksgiving. What was that? November. Those 3 weeks in November, those 4 weeks, I guess, were absolute insanity for crypto.
Yeah. I mean,
absolute. That was a 200% move on BTC in November 2017. December.
It was literally a transition from like, I'm making all this money, go sit down for Thanksgiving dinner, tell your family, and then Coinbase premiums skyrocket as like people's families go and buy Bitcoin.
Yeah, that's just for people who don't know the monthly seasonality stuff. Not to say we're going to go 200% up again this year, but it looks good. It definitely looks good.
Yeah. So
I don't know what else we have. So could we be more bullish than we are right now? I don't know. I feel like I'm still cautiously optimistic because I'm not like maximum leverage it up right now.
We don't have complete confirmation yet, but when you look at things on the longer term time frames, it's hard for me to look at this and think we're not going to break up. Like, we may dance first, like, we could really get annoying here on the low time frame stuff. Like, maybe we go back down to 10.6, 10.7, 10.5. Maybe we go deep and like do a scam wick to 10.2. That's the type of stuff that's going to be very scary, but I'm not going to change my narrative unless we truly break down off of this. The 200-day moving average keeps moving up. It's now all the way up to 95.81. It's moving really fast now. It must be representing like some of these down days from, let's measure that, Josh. That is something that we need to measure. 200 days. It's exactly what's happened. Boom. So our 200-day moving average is now priced out the March death drop. So that's why we're getting this massive acceleration on that 200-day moving average now. So that'll continue to happen as price, moved up in recovery after all that mayhem. So we're normalizing higher prices through the 200-day moving averages. I imagine the exponential moving average, the EMA, is higher because it already had weighted the newer stuff more. And so we're going to continue to see like the 200-day moving average will come up to 10.2, 10.5, whatever, pretty quickly now.
Yeah, it's at basically 10K right now, the 200. The real 200 that
The EMA
makes more sense,
It does not make more sense, but you can say whatever you want. It's so it's at 10K now.
Yeah, it's at 998.
Yeah. So, and I think that's what helps normalize prices, whether it's this market or legacy, like the sideways and the whatever else, like it just has to have enough time to price out the big volatility.
The heart wants what the heart wants, Brian.
Yeah. I guess I still do. I understand the contraction, deflationary market, bear market, recession. I understand all those narratives. I get it. It's just we're not seeing it yet. And even if we see it in the real economy, we're not seeing it in the way we react. We are printing endlessly so that maybe it's not good for jobs and stuff. We're seeing tons of layoffs, right? Like permanent layoffs becoming permanent and stuff. But we're not seeing it in asset classes and from a trading perspective and markets and all that stuff. And that's where the wealth in the economy is. So if we're participating in these markets, then they have room for up until something proves that it shouldn't be that way. What the heck are you looking at, by the way?
Yeah, speaking of printing, I saw this the other day on Twitter, and Jack mentioned it again, that throughout whatever time frame you want to pick, there was a massive correlation with Tether Printing and BTC price movements. And we're at 20 billion over that now.
Which
total,
is crazy.
Not just Tether, but total stable coins across the board. And we've yet to see, specifically in since August, really, like a bullish reaction from Tether Printing. So those Tether truthers are quiet, but
and you know why we haven't seen that price reaction yet, right?
I don't,
because those tethers were going to DeFi.
Yeah. Okay. Well,
so
that's fair.
The question that we have is, and I proposed this in a tweet that you probably ignored. Josh has me muted, I'm pretty sure. So what I proposed was, are these crypto native Tether participants, or are these just random tech savvy people seeking Tether related yield from farming with stable coins? I think that these are enough crypto native people that if they have all these tethers in there, a good percentage of those tethers, not all, like some people, they just have certain risk tolerances that they accept. But I think enough of the participants are crypto native enough to say, you know what, I'm gonna throw these tethers that I've got in the market into Bitcoin because all of these reasons tell me to do so. And that's plenty to get that price reaction that you're talking about.
Yeah, so they're either throwing it into DeFi yield, which is cooling off, or they're looking for the next score, which would be a BTC just speculative move, or whatever you want to call it, a BTC price move to the upside. Yeah. The BTC locked in Raft BTC has slowed down, as has ETH locked into DeFi. That's slowed down a bit. But if we see these accelerate, along with Tether printing, along with stablecoin printing, along with all of our other biases from the technicals on the chart, I mean, you can't be bearish, right? Like, it's just a supply and demand thing,
Yeah, I think so. I've done a ton of this research and other stuff around yield farming, and a lot of the things that people have done to put these tethers to work in the DeFi landscape. One of the things that you run into, though, is market participants get smarter. So the tokens that are for purposes of governance and that are rewarded to people that do yield farming, they get less and less attractive if the token price is constantly going down, essentially forcing yields down, right?
Yeah, I mean, but I think everybody knew that wasn't going to last. You know, you don't
Yeah,
need to be,
but
you don't need to like get smarter to realize that 10,000% APY isn't going to last for the entire year. You know.
no, I don't even think you have to do the dumb ones like I mean, sushi's trying to be real now, but like when the food tokens and clones and multi-1,000% APYs, everybody gets that, but there's another realm of it too. Like, if there's contraction in the market and you have to have exposure to something else, like it's not just a stable coin that you have exposure to farm, or whatever else. Like, I think there's reason to think that yields are going to continue to squeeze and make the yield farming less attractive. And if Bitcoin, where I'm getting at with that, if Bitcoin really starts moving up, those dollars in farming, they may just prefer to be in Bitcoin. Like if you think, hey, here's the measured move, it's 30 or 40 or 100% potential on Bitcoin, maybe you'll move your stable coins into Bitcoin rather than keeping it in, something that's mirroring the dollar, and all you're getting is whatever minimal yield that you can achieve.
Yeah, once BTC hits escape velocity, I think everybody gets sucked into that regardless of your current position. Like,
Yeah.
even if you're an altcoin maximalist, you're going to have BTC exposure, like you're saying, just even to hedge against your alt BTC losses, really.
Right. And the other thing that I've noticed in terms of the way the pooling mechanisms work, when you have to hold 50-50 of something, you may maintain liquidity in things that people are okay having partial exposure to and permanent loss with.
Excuse me, sorry.
It's fine. Like, you may be okay in an ETH USD pair, and you know that the impermanent loss is there, but you're really only going to lose relative to, you're not going to get as much of Ethereum's gains or whatever. But the liquidity on some of the others, where you lose a lot, like you get impermanent losses while Uni is going way down or Wi-Fi is going way down, something like that, those can hurt and drive people to get out of the pools because the rewards via the governance tokens just aren't good enough to justify the losses that you get by being a liquidity provider. And it makes me wonder if that liquidity will dry up as the rewards get less and less, and what that dynamic will be. I don't know how it'll play out, but that's one of the potential risks to the way the liquidity mechanisms currently work in the DeFi landscape.
Yeah, I mean, it all just, we've talked about this a million times before, but it all just feels like a long leverage squeeze. I mean, we saw that with YFI, with Sam's wallet, like unlocking that YFI.
Yeah.
I don't know if you saw that tweet this week.
Yeah, there was a bunch of threads, like people giving Sam crap about it from FTX. I don't think you necessarily need to give him crap. Like, he's just playing the game,
Right. Yeah.
But
I agree.
he was able to use a bunch of his own tokens, like FTT and stuff, as collateral on Cream and Aave and others. And then he borrowed things like Uni and Wi-Fi, and then he dumped them. And it was enough that he borrowed that it sent the price way down, like it cascaded.
Yep.
So he made a bunch of money by essentially forcing those coins down. And yeah, how do you fight that? It's tough. That's a tough one.
Well, when stuff's going up, people forget that it also can go down on just as much leverage as it took to bring it up,
Yeah.
So that's a two-way street that people forget. They're like, oh, they're all so bullish on DeFi and high on DeFi and governance and all this stuff. It's like, well, if you want borrowing and leverage, that goes the opposite direction. So don't be surprised when someone like Sam, some whale like Sam, just unlocks a bunch of stuff and just dumps it on the market.
Yeah. And I honestly, I didn't play in terms of DeFi leverage and what people were doing with that, which is one of the cool products that you could do. Like, it's interesting, but you can lend and borrow. The only one that I've had that I've done that with is the actual Yearn vaults. You can deposit Ethereum and get YETH back, which is basically the Yearn IOU to say this Ethereum is yours. Well, again, Cream accepts that YETH and then will lend you ETH back. So I was basically giving them Ethereum IOU to get a percentage of that back as Ethereum that I could then go do things with. But this is all Ethereum to Ethereum to Ethereum. So it's not like if something dumps, I have less, like it's just exposure to Ethereum, and I'm using that Ethereum to go off and do something else. But there were people who would say, post up, let's say Wi-Fi valued at $30,000 or $40,000 as collateral, borrowing something else like dollars, and then going and spending those dollars on more Wi-Fi. Well, when Wi-Fi goes down, it's no different than any other leverage long. You could get in real trouble.
Yeah, you're losing money on losing money at that point.
Yeah, that's classic leverage. Mine was just I don't know what you call the way I was doing it, but it's not leverage per se. Because at any time I can just go redeem the Ethereum. It depends on what I do with the Ethereum I borrow, I guess. I guess that's the only difference. But I was basically, doing lower risk stuff with it. So I think that squeezed a lot of people. I don't know what the actual, what liquidations occurred, from people that couldn't repost their collateral or whatever. But I would feel pretty scared borrowing a different asset than I'm lending.
Yeah. What is that? I don't know if that's two-way variance or not, but it's some form of something where it's just extra risk, right?
Yeah. High IQL says he just wants a big corn pump and alts to capitulate. I don't think alts will totally capitulate relative to the dollar. I think they'll float, and I don't think they'll outperform that. Once Bitcoin goes, I really think the Bitcoin will be the place to be. I think Ethereum has a chance to perform well. Do you have any thoughts about that? Do you think upwards moves and Bitcoin will force alts down relative to the dollar or just relative to Bitcoin? What do you think?
Well, I think ETH will keep pace or try to. I don't think many of the alts will necessarily go the opposite direction. I just think they won't be as strong, right? Like that's typically what we see in a bull market. Like in a bear market, everything just overreacts together, but in a bull market, stuff sort of moves separately. I was trying to pull up the dominance chart. We haven't mentioned that today, but so many charts open. I don't know where it is. It was looking pretty bullish.
I've got it.
Okay.
Yeah, it's kind of selling off though on a weekly basis. So it looks like dominance is actually going down currently with this move.
What I was also saying is I don't know in that calculation how they include what they include in the denominator as far as new listings,
I wish they did this with like the top 100. Like what's the top 100 dominance?
Yeah.
Something like that would make more sense to me. Because tons of coins are just being created out of thin air, which affects dominance in a big way. It helps for identifying like what's the speculative nature of the market. Like are all these coins being created and what kind of market caps are associated with them? But yeah, I mean, if I look at the dominance chart purely, it looks like alts have room to go for a little while, despite Bitcoin's health, which, I mean, that's fun for a speculator like me who wants to be able to increase my Bitcoin through altcoins. Like that gives me an opportunity to do so. Like I love holding Bitcoin while Bitcoin goes up, but if I can hold altcoins and get more Bitcoin and then Bitcoin goes up, that's even better, right? Like that's the game.
Then you're winning on winning instead of losing on losing.
Yeah. Yeah, we'll see. I guess it's just Bitcoin sits there at 11K or, between 11K and 11,150. When we get over 11,150, man, we're going. And that's when this dominance chart takes back over.
And if we get a weekly above 12, like I said, the difference between 12 here and 12 in 2017 is we're not up 10,000% when we're at 12, right? We've been consolidating essentially for over a year, almost a year and a half at this level at 5 digits.
Yeah, the normalization of 5-digit Bitcoin is a huge deal.
So 18 is not only a yearly pivot, but it's also the median line on the pitchfork for BTC. So it sounds insane. It sounds insane, as it always does. But here we are.
Are you saying 18K 2020? Is that your prediction?
I wouldn't be surprised if we get 18 by 2021, and I wouldn't be surprised if we go to 10 in Q1 2021, because
Yikes.
Q1 is bearish, Q2 is bullish.
Yeah, I mean, I think, and dude, from personal experience, and I'm sure others are in the same boat. I mean, you remember?
Taxes.
Yes, you remember what happened last time, right? Like,
Yeah.
you got to put money aside to pay taxes, and if you don't think people are netting gains on DeFi, at least in total, then surely they are. I did. I mean, I'm gonna have to put money aside, and my timeline runs out at the end of the year. So peaking literally December 31st is totally within the realm of possibility in my mind.
Yeah, I agree.
I don't think we'll get 18K by then. I think we could get that retrace, and then I think we'll work against all-time highs like sometime Q1, Q2 next year. I did another chart, and I show the vertical lines, like what it looks like on a weekly chart when you have like Q1, Q2, Q3 all lined up. I mean, so this stuff needs time, like it's not that far away from each other. It's not that many candles when you draw out those quarters. So it's not weird if we don't make an all-time high until the end of next year. That's a double in Bitcoin, and Bitcoin's market cap is big enough to where that's not that much time. But we can also move fast at any given time. So like, that's how I drew it out. I was like, I don't know, maybe between Q2 and Q3 next year makes sense for hitting that all-time high. But for the high of this year, I could totally imagine it being the very end of the year. Like that, whatever it is, like 14, 16, 18, somewhere under the all-time high, but above our 12K key zone.
All right, since 2010, the average Q4 return has been 115%.
Wow.
So 115% from here is 23.
Now that would blow my mind. I don't think I'll hold Bitcoin if we get to there. Not much.
So, I wanted to go slow. I'm with you. I want to wait till Q2 2021. But if this moves like it can, 23 wouldn't be unreasonable.
If we make a new all-time high this year, 33K by July.
33K by 2021, July.
Yeah.
I like 18K by October. What is this? 24th. 18K by October 24th.
No way. That is so fast.
Clock is ticking.
No way.
Hey, so that one guy says it only takes 10 days, 10 days a year for BTC to move.
Man. Yeah, you got to be in BTC at the right times. That's for sure. That would be something else.
It would be. So I don't know. I'd rather just go sideways till forever. That's easier to trade, easier to do. But if not.
Well, we started the year at around 7,200, and we'll have to. I mean, if we're right on us breaking up and it goes to like anywhere above 14, we're gonna have to pull out that first episode of the year where we made our predictions and said 5K and 16K both in the same year, because wow. That would be a dead-on hit. I would be in disbelief about a new all-time high in 2020. I'll put it that way. I would not be in disbelief up to 16 to 18K, like you said.
Oh, what's an all-time high? That's an all-time high, right?
18? No, it's 19 something.
Oh, 19.7, whatever. I mean, what's a few $100s when you're at 18,
Yeah, it would be like when we broke up from the bottom and we went to 6K, and I was like, this is going to take some time. And then like 3 days later, Bitcoin was like, what's going to take some time? That would be the way that moves.
Yeah. So you know what? I'm ready. Let's go.
Your body is ready.
My bias is ready.
Yeah. So per my Interall markets the other day, it would also signal if Bitcoin does get this breakup, like have yourself some Bitcoin exposure and be able to liquidate those alts if they start getting smoked on the Bitcoin relative pairs. That said, I don't know how that squares with our bullishness on Ethereum. So it's kind of complicated.
Well, it'll still move. Like it's gonna move on the ETH 2.0 transition regardless.
Yeah.
I think. So
It might be difficult to time though. You might get like 5 days where Ethereum outperforms like crazy.
the weird thing about ETH, you know what the average return for Q4 is on ETH?
Oh no, I don't.
1%.
What?
Q4 has been historically the worst quarter for ETH.
Wow.
Yeah. So
How about them apples?
take that to the bank.
Yeah. All right, you heard it here first. 18K by the October 24th for Josh for some reason. I don't know why. I don't know why you limited yourself to that. I say by Christmas.
It's the pitchfork trend line. Like that's where 33K came from. People think I'm just like pulling targets out of thin air. It's like, no, I'm just looking at rate of change on the trend, you know?
I say 16K by Christmas, which is not near as ambitious, but would
All
still
right,
be
well,
very exciting.
Yeah. Let's go.
Let's go. All right, let's leave it there. We've had enough daydreaming here. Thanks to Matcha for being our sponsor. Go to ledgerstatus.com/Matcha. Check it out. I want you guys to take a trade on Matcha. Tell us what you bought on Matcha. It's a great trading experience. Seriously, it's the best trading experience you can make on a DEX. Ledgerstatus.com/Matcha. Thanks for being supporters. Give us a rating or a review. We'd love that. Talk to you later.
In the blink of an eye, the easy river has just run dry. In a house of cards, I feel the breeze wound so tight I can barely breathe.